Hey guys, this is Avi Harkishan from AA Charts. Just want to do a quick video going over just the indexes for tomorrow. Today is Monday, January 12th. It's 2:35 a.m. here in New York as I'm recording this video quite late. Just want to send out something at least even if it's late. So let's start with breaking down VIX really fast. You could just pause this video and just read the screen if needed be. I'm just going to try to make this as fast as possible. Currently, what I'm looking at for VIX is we're just rejecting this area here at 1581, and we're breaking down from a bear flag, as you can see here. Our last point of support, which we have, I'm going to show you next chart right over here. This here is our last point of support, pretty much. And it's an area that we're currently watching to see whether price is going to bounce at this area here, which is 1458 to 1412. That's our support region as we're breaking down to this from this, if you want to call it a rising wedge, bear flag, whatever the case is, you decide on what you want to call that, but pretty much it's a rising wedge. Um, I really think we could retest based on how a rising wedge works. Once you break down, you tend to retest the break, which is going to be 1506 area and a continuous break to the downside. So going into tomorrow's session, I will be watching to see whether or not we will be retesting this 1506 or the top of this trend here. You have resistance of 1581. So you can retest the top anywhere between 1506 to 1581 going into tomorrow's session. So just watch that. If VIX is going into resistance and the indexes are coming down into support, those are inflection point that you want to pay attention to. Key areas, don't really care to trade in the middle of a range or middle of two levels. You really want to get, if you're day trading, you're scalp trading, whatever the case is that you're doing, you really want to get into trades closer to a level, a key level, whether that's a support level that you want to go long or resistance level you want to go short. That way you are maximizing your rewards based on the risk that you are taking for that trade. So that's what I'm pretty much looking at tomorrow as we're breaking this level. You're currently rejecting the point of control and you're rejecting 200 and the 50-day EMA on the daily chart. So the next support level here that we have is 1270. If you start breaking down, you're going to come down to 1270 because you're still in a bearish trend on VIX. So VIX is really important. We do gauge VIX in Discord because it's very, very important that we understand inflection points and where VIX tend to bounce and where VIX tend to get rejected, so we could gauge the market closely as we're trading. Let's take a look at SPY. So here is SPY going into tomorrow. You could pause the screen. You could take a look at this. You could read it if you needed. So you can see all the major areas and key levels I'm looking at and my thoughts. The macro chart on SPY overall, the weekly, daily, looking at Elliott wave, volume, price analysis, and everything, it still remains bullish, targeting 765 once price break above 695. So we're looking at this level. This is the macro chart right now. Key level we're looking at here is a break above this recent high. Still think you get more, a bit more space here to run up to this maybe 765 area. That's the area we're looking at right now. Based on this, you have wave 1, 2, 3, 4, 5. You break down, and I think you're gonna complete. And this was this cycle here. You break down. Now we're looking at the April cycle pivot low. You have a wave 1, 2, 3, 4, and your fifth wave is somewhere around this 765 area. So yeah, you can see pullbacks happen on the daily charts or intraday and so forth. But on the macro chart, we are still bullish and expect price to continue to move to the upside here. This here is more of an intraday chart and daily chart, but this is what we expect. You're currently in wave 5. You just had a wave 2 pullback. Expect price to continue to move to the upside here to complete wave 5 on SPY. So our target here for SPY is somewhere between 740 to 760 on the upside for SPY. Going into tomorrow, we're really looking at 695 level, and we are in a rising wedge. So I expect some sort of breakdown tomorrow to probably retest this key level here, which is 689 area. So I want to see 689 hold tomorrow and a break of 695 to get to this 697, 703 level. If you break below 689, you are pretty much correcting this pivot low over here, which is around this 686 level. So this is level I want to see hold. If you're breaking to the downside, you're just retesting this level over here. That's the level you're really retesting. So don't be too quick to jump into short positions tomorrow. Be very careful. The market is still showing bullish sentiment. Just be careful. Let's see if we have anything else here. Yeah, you're still trading above the point of control in the daily chart on SPY. So expect more upside. Just be careful with your trading. But we are seeing dips for continuous buying. Looking at gamma exposure tomorrow, 695 is key level. You want to get above 695. This is where market maker starts to hedge their position by selling shares. All right, let's look at QQQ really fast. You could pause the video, take a look at everything, read this if needed. Don't want to go through reading that. You could just pause the video and read it if needed. We're looking for, we do expect on the grand super cycle, which is the outlook right here. The structure remains bullish for further upside to 697 on QQQ. So we're expecting dips to continually bought on QQQ with a price target of 695. The wave structure within the daily chart is, I'm going to just go over that really fast with you. Pause this, read it, so you'll understand the context behind of what I'm saying. This here is what we're looking at, grand super cycle, wave 1, 2, 3, 4, 5, expecting wave 5 to go towards that 697. I'm not going to call top, saying 697 will be the top. I don't want to be that dude who calls the top every single time. If volume price analysis, if the chart continues to extend and move to the upside, we'll just continue to trade the way price action is indicating. Let's look at this. Okay, so we're currently trading within a symmetrical triangle. This here is the daily chart currently. And so we're looking at within, we just had a wave 4 pullbacks. So within that wave 4, we have wave 1, 2, and we are expecting wave 3 to break to the upside to get towards that 697, $700 target we talked about. So as we complete wave 1, 2, we are completing wave 1 here. Within wave 3, we have wave 1, 2, and you'll have wave 3, 4, 5. Within each wave count, you do have sub wave counts using Elliott wave. So you might see a little bit pullback here to retest these low you have here, possibly break to the upside. That's the bull case scenario. The bear case scenario is that this here was wave 3. This was wave 4, this is wave 5, and you're having an A, B, C to the downside, and you're breaking the downside. Want to give you both scenarios. Don't want to be the perma bear, perma bull. You need to understand both the bearish and the bull case scenario. Right now, we are leaning a bit more bullish because the overall market seem to be leaning more on the bull side. But bear case is that this is wave 4. This is wave 5, and we are correcting in an ABC, but so far, it looks like we want to break to the upside. So I'm more bullish than I am bearish. So this is what we're looking at. The reason I'm saying there is a bear case scenario, because I am seeing daily MACD divergence building on MACD and RSI divergence, but it's currently trying to break pivot on both MACD and the RSI. So whenever it's breaking pivot level, and it could hold above that level, I expect a breakout to come very soon. So that's what I'm looking at for QQQ. Here it is. The key level going into tomorrow is at 630 level, and 638 you break and hold this 630 level here. The next target we have is at 638 level, so $8 move to the upside. Pause this, read my notes if needed. All right, you're currently trading right at the point of control over here, trying to break out. So you start breaking above that 630 630 areas I talked about, you can see move to the upside, especially if you're holding above this 630 or this point of control here. You can see continuous move to the upside, which we're currently forecasting. These are the gamma levels that we have. Positively skewed to the upside, you have support here around this 625 area. For any pullback, expected it to be support at 625. Still have some upside target here at 630. 635 would be the target. 635, 638, where you'll see some hedging taking place, where you can see a pullback or so. All right, that's for QQQ. Let's take a look at IWM. So for IWM, Grand Super Cycle is still forecasting more upside on IWM. IWM has one of the most bullish forecasts in terms of Elliott wave. You don't always want to, I say this to all of my members, don't trade Elliott wave blindly. Please take into the account volume price analysis, chart patterns, and everything that's taking place. I never trade Elliott wave blindly. I use Elliott wave with just a forecast, but I use volume price analysis, Wyckoff, and these methods to see more context, to see what's really going on within that chart, because volume tells a lot as well. So I use various methods to give me a 73% accuracy in our forecast or trading to see where price is going to go. And I always say levels are key, and patterns and volume. So pause this, read it. You could this will give you context to the chart we're looking at. So on the IWM Grand Super Cycle, this is everything you're looking at from the inception of the chart. So you have wave 1, 2, 3, 4, and you are currently in wave 5. For IWM, wave 5 seems like it wants to continue. You just had a wave 1, 2, and this is your 3, 4, and 5. The April that you see, the pullback April, that looks like a lot. That was just a pullback here. Within that wave 3, the macro wave 3, Grand Super Cycle wave 3, that was the April pullback. And this was a wave 1. You went up within wave 3. Remember, I said every wave has a subwave. So within wave 3, you're going to see 5 subwaves. So you have wave 1, April pivot low, which was wave 2, and you're currently in wave 3, 4, and 5. So this entire wave is looking to complete around 420 area or so. And wave 5 around 500. So anywhere between 420, 430 to 500 is where this entire cycle ends for IWM. And if you look at it carefully, it's actually in some sort of pattern like a rising wedge or so forth. Now, if you take a line and you draw it right across here, you're trying to break this level here to move to the upside. And how did I get this rising wedge pattern? Based on what I just showed you over here with the rules that you use for forecasting Elliott wave. Once I've used those rules, once I've applied those rules and I check the chart, it's actually forming a rising wedge pattern, which makes complete sense within a wave 5. So you want to see that rising wedge pattern within a wave 5 and bearish MACD and bearish RSI divergence. That's the things that you're looking for, that I will be looking for. So IWM has the most bullish structure on the macro, which seems like it wants to continue to move to the upside. And this is our forecast right now. Think we're heading into that 350 area right over here on this wave 3. What is that? Around 350 area. So, all right, this is what we're looking for from April 2025 pivot low, which was over here. That's the retracement you see in April, right over here, pivot low. This cycle is looking to end around $305. We're above the extension 1 or retracement level 1. So the next level we're looking for is around a target of $305 for IWM. Now, looking at daily chart near-term forecast, this is more for intraday traders and so forth. We are looking for a near-term target here around $266 to $277. This here is from pivot low between right here, from this pivot low. when was this? I think this is somewhere in January 2026. I believe so. So you had an A, B, C retracement to the downside. This was wave one, wave two, and you're in wave three over here. So based upon this pivot level over here, you're breaking above 258. We could expect to see a retest of this 258 level over here, and then continued move to the upside between 266 to 277. So near term target we're looking for is at 266 to 277, but the cycle from that April bottom ends around a 305 area to that 1.618 extension, which is this here that you're seeing, this white path down here. That's the extension you're looking at over here. But somewhere over here, I expect to see some sort of retracement to come back down and test these key areas here. Now, for active traders who's trading this, you have your double bottom, which is your ABC. And going into tomorrow, we are expecting any pullback to retest and hold this 258 area. This area I want to see hold. If you drop below this area, then you have this 254. These are your key levels here, 254, 252, and 250 to retest this level here. But I'm expecting this 266, any pullback to hold, 258 or so, move up, and then you could come back and retest this area over here. As in a wave one, then you have your wave two, come back and retest 252, 250, which was a key resistance level over here. And you're breaking that level to come back and test that level before you continue to move to the upside. Okay, that's what we have for IWM right now. Hopefully that was helpful for anybody that's trading. This here is your key area, 262. You want to get above 262. Market makers will tend to start hedging by selling shares once you get up to 262, which is one of the biggest gamma exposure level you have in the chart. Any pullback you're seeing here have support at 258 and 257. So that's your support on the GEX level and on the chart as well. So you want to see confluences. You get above that 262 area, and you're gonna very thin gamma moving up here, so you can get to 268 level. So that 268 level, as we just talked about, another confluence in our chart that we're talking about is right over here, 266, which is the key level that I have. 266, 266, 277. All right, hopefully that was helpful. That's how I analyze charts. This here is our weekly analysis that I posted every evening and every morning pre-market. I will post analysis for, as we are intraday traders, as we're day traders, scalp trading. So you have more levels within a 5 minutes, so 1 hour chart as we're trading. All right, have a wonderful week ahead at trading. Hopefully this here was helpful. But oh, let me go over GDX really fast. GDX is a gold miner that tracks an ETF that tracks gold miners. So it tends to move with gold. You could pause this and you could read it, but using our Wyckoff and Elliott wave principles, adhering to their rules, we are targeting a 115 price level here. Just pause and read this if needed. And so I'll give you context to the chart. So this here is our GDX using Wyckoff, using Elliott wave. This here is the accumulation that was taking place, and from that March 16 bottom, the pullback that you have, right? This here is wave one, wave two, and you're seeing wave three taking place, which should be over here. Somewhere here is wave three, wave four, and continue move to the upside. But we are looking at with this here from BU/LPS. You have wave one, two, 3, 4, and wave 5 ending at 115. That's where we get our target from. Now, it is a possibility that where I have wave 5 will actually be wave 3, and this is not wave 4. Why am I saying that? Because within the subwave of wave 3, what I do see here is a wave 1, a 2, and you could see a wave 1, 2, 3, 4, and a fifth wave forming. So this fifth wave here, we could move this up to wave 3, and wave 4 has not been formed yet. So you can still see more upside. So we'll adjust that if needed, but we are targeting that 115 level right now on GDX. The macro is calling for more upside in GDX, 115 and above if you're using the macro chart from this over here, from wave 1, 2, 3, 4, and 5 to the upside off the chart here. All right, but we're just looking at 115 at the moment, and that kind of matches. If you're looking at this, I expect around $97 area, 97 to 115, where you can see a pullback on 97. You do have a 4-hour gap here, so you can always see a resistance here, pull back and fill this gap before more upside. There's also that you could pull back to this level over here. We're looking 85 of support, 88 of support. If you break 88, you're going to fill this 4-hour gap over here. These are the key levels that we have on gamma exposure. 95 to 100 is the biggest level, which is our target right now. All right, hopefully that was helpful. Have a wonderful trading day, guys, and a wonderful week ahead. Take care. Bye.